Good morning, and welcome to episode 117 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, April 5th, 2023. Tensions remain high, both internationally and domestically. Internationally, we continue to see saber rattling between the U.S. and Russia and China, all looking to see who's going to blink first. In the meantime, NATO has just gotten stronger with the admittance of Finland, who has a long border with Russia, admitted to the alliance. Domestically, tensions are high as former President Donald Trump was charged yesterday in New York with 34 felony counts. Democrats are looking for justice to be served. Republicans are screaming foul that this is an attempt to block the upcoming presidential election. We'll see how this plays out. No matter how it does, this is absolutely unprecedented in U.S. history, first time ever. On top of that, weak U.S. data came out yesterday, which had a big impact on the precious metals markets. Job openings fell to the lowest point in nearly 2 years yesterday, and factory orders for March were down as well. This gives the doves a reason to rejoice, the people that are looking for either a pause or a reduction in interest rates felt like, okay, Chairman Powell, this is what you've been looking for. You've achieved your goal. Now you can take a breath and cut back on the interest rate increases. Gold and silver absolutely rejoiced. Silver was up over 4% yesterday alone. Gold was up nearly 2% yesterday, and they're both enjoying the prospect of a pause or a pullback in interest rate increases. Let's take a look at the numbers because they're a big change from last week. Gold is up 2.8% for the week to $2,022.90 an ounce from 1967.10 last week. Silver, the big winner, up 6.7% over a week from at 24.88 this morning from 23.34 last week. It actually touched and held above 25 for a good bit yesterday. Platinum is up 6.5%, nearly equaling silver's appreciation. It's at $1,035 an ounce from $972 last week. And palladium's up 3%, just easing ahead of gold at $1,556 an ounce from $1,510 last week. Now, silver vastly outperformed gold over the past week, and as a result, that gold-silver ratio has come down significantly. It is sitting at 81.63 versus 84.6 last week. That means it takes 81.63 ounces of silver to buy 1 ounce of gold right now. Still attractive levels to be buying both gold and silver as they start to move up. And the reason for all of this strength in precious metals is really weakness in the U.S. dollar. We called for this quite a bit ago, that we thought that the U.S. dollar's strength had peaked. It looks like it has. It continues to fall. It's at 101.69 today versus 102.65 last week. The question remains, is this now the rally for gold? Is it through 2000 to stay? And I don't know the answer, honestly. I do know that gold was testing the 2000 levels several times, dipped back to 1950 an ounce last week. I reported that from Florida down at the Investment U conference. And now it seems to have gone through 2000 pretty surely and with some strength behind it, but it doesn't mean it can't dip back below again. Every dip, whether it falls below 2000 or if it just pulls back near 2000, is an opportunity to pick up some cheap, hated gold. It is the time to get into this market. There's no question. The rally is here. It's coming. If it doesn't break through and hold now, it will soon. Take advantage of this dollar strength. It is fleeting. As always, we'd like you to go ahead and subscribe to us on the YouTube channel. Like us, send us your comments and questions. Subscribe to our social media and our newsletters at Asset Strategies. But don't ever forget that getting rich starts with keeping what's yours.